Welcome back. I'm in Bangkok, sitting down with Mandi, who is in Melbourne, Australia. What's up, Mandi? How are you doing today?
Yeah, I'm really, really well. Thank you, Etienne. It's been an amazing week in the markets, hasn't it? Crazy volatility.
Pretty interesting this week, especially. Yeah,
Yes.
I agree with that. So perfect. Today we'll talk about psychology, and more specifically, what differentiates the profitable trader versus the non-profitable one. What are some things that they do that are different, or what are some habits they have, perhaps, or just some different way, like, on a bigger level of thinking. So, Mandi, you are a full-time trader. You scalp I think, the DAX and other things as well, or only the DAX?
Mostly the DAX, depending on the time difference, I try to get onto the Dow as well. But at the moment, it's 1:30 in the morning, and so I was fighting with a mosquito last night, so I did trade because the mosquito won. But usually it's a little late. Just depends on the time difference.
Awesome, awesome, perfect, very nice. And so, yeah, so you are a full-time trader. You are a psychology expert. So you taught people how to kind of improve their psychology, think in a better way, and change their habits in trading and their behavior as well. So
Yes.
let's begin. And by the way, if you guys are watching this live, you can comment below in the chat. You can post your questions there. I will ask them to Mandy, so we'll be able to give you feedback on your questions and make sure you have some good results from that live stream. So Mandy, what comes to your mind when I ask you what separates the profitable trader versus the non-profitable one? What's the one thing that comes to your mind first?
Yeah, of course, mindset. So let's see. It depends, right? Should the answer be? So when we start out trading, we don't have much knowledge and expertise as yet. We need to, of course, build a methodology, and within that methodology, a strategy that is profitable. And this is a really difficult task for most traders who try to do it on their own. Um, Again, it's to create something from just learning from YouTube videos or reading books. Creating a strategy is so incredibly hard. So it's so important that you have a team around you or that you learn from someone who already is profitable. Um, so we need to get a strategy. The second step is we need to have the skill to execute that strategy. So I always say, just because you put into your plan that you have to take the loss at a certain point or you have to let the profits run to a certain point doesn't mean that you can actually do it. Taking your losses, letting your profits run is a muscle that needs to be trained and practiced, just like anything else, just like lifting weights, or just like playing tennis or playing golf. And this is what most traders underestimate, that they think just because they write it down or they put it on in a post-it note on their monitor that they can easily take the losses, but they realize that it's not that easy. So it needs to be practiced. That's the skill to execute your strategy. And then, of course, your mindset. Your mindset is all about your thinking patterns. So the way you think, how you feel, what do you do with your emotions? Right? So we know enough about emotions now that we know we can't and we don't need to escape negative emotions, as they call them negative. To me, there is no such thing as a negative emotion. But there is emotions that help us to propel forward, and there's emotions that stand in the way. So the profitable traders compared to the not as yet profitable traders are the ones who have a strategy that they fully trust. And most of them took years before they got a strategy, which is their bread and butter strategy, the one thing that helps them to really excel, and then build onto that strategy and maybe create different strategies around it. So I call them satellite strategies. We all have certain strengths and weaknesses. So we all are either really good at reversal patterns or really good at continuation patterns. Now, when you have a market that's been so bullish and strong as it has been in the last few years, if you only have the skill to be a reversal pattern trader, then you're lost. You need to practice being a continuation pattern trader as well. You need to have more tools in your toolbox. And that's what I found with the really successful traders. They have several tools. They have many tools in their toolbox. They've studied and practiced so many different ways of looking at the market, analyzing the market, and an understanding of how the dynamics of the markets work. When I say dynamics, I mean, for example, we saw that last night the US market was, so the Asian markets came down. US market, the European markets didn't do much. US market was pushed up because of options expiry. Now, if we understand the impact options expiry has on the movement in the markets on a Friday, which most traders don't, by the way, then maybe we have an additional tool in order to succeed. Now, it doesn't need to be that. Like, there's plenty of traders who don't understand, and that's me included, options expiry on a Friday, and still can read the market accordingly to, you know, to be able to profit from it. So that's the skill set, and then of course the mindset. So if you see that your strategy is working, that you have practiced the skill of executing, practice the skill of not micromanaging, which is also a skill for letting the profits run, and you still have challenges to succeed. So that's the old knowing what to do, but you don't do what you know. Then it's the mindset that you need to work on. What I found, for example, one key trade difference is that the successful traders, they make mistakes like everyone else. But the difference is that they move on really, really quickly. They don't dwell on the past. They keep creating a new future all the time. So you see in the back behind me, Linda Rushke's book, Trading Sardines. And I studied, as you guys know, Linda is one of the best traders in the world. And we know because she had her accounts audited all the time. So it's not like we just assume she is great. She actually had the accountants confirm how well she did when she was running her fund. So Linda, in that book, Trading Sardines, it really is clear that anytime she was in a drawdown or she made a mistake or stuff happened like, you know, like a storm and all the telephone connections went died, or when she was ill, or whatever happened, because things happen in life, she would then just buckle down, focus, and just really magnify her efforts to make her losses back and end the month up even better. So she has this incredible skill to, I don't know if it's a skill, it's the trait where she makes mistakes like everyone else. She complains about it for 5 minutes. Oh my God, you know, I took my profits too early. There was another $1,000 in it, or, you know, whatever the complaint would be. And then 15 minutes later, she is already focusing on the next setup. Whereas the traders who keep repeating the same mistakes over and over again, what I see with them is that they keep beating themselves up. They're like, oh man, how could I do this? Or, you know, I can't believe. So I had a trader, for example, yesterday who was in a profit. The internet dropped out. He's also in Australia, so our internet seems to be struggling at the moment. These are the same company that I'm with. And so internet dropped out. By the time the internet had dropped out, the trade turned around and he ended up in a big loss, a really big drawdown. And so he was so upset about it, and he couldn't perform afterwards. You know, like all these, like how could I not have my phone handy to get out of the trade on my phone? I can't believe the internet dropped out. It sucks, you know. Whereas the profitable traders, there would be, oh man, this is really, really annoying me, and frustration and, you know, anger for 5 minutes, and then, all right, so let's make that money back. Let's focus on the next setup. Does it make sense, Etienne?
It makes sense, and you mentioned a lot of things there. So one of them that I definitely agree on is the one that, so I've never seen any trader who's professional and trading full-time who's like, oh, this is the only way it's going to work. This is the only way you can trade. The other ways don't work. I've never seen that. And that's because they're open to different things, different way of doing, different ways of trading and stuff. And that's a good point. And the other thing is, so you mentioned being able to get back after your losses, and or accepting your losses. That's not something you do only once. Like, you might accept your loss right now in the market, but then I found for myself it comes back later. When I have like a tough time, it comes back later, like a few days after, where I feel like, oh, I don't want to look at the chart, I don't want to trade, I don't want to do this, and that's what I had to work on for myself. So that's a good point, and I think I totally agree with that for sure.
So how did you work on this, Etienne? It would be really interesting if you could share.
Yeah, so I took a coaching program by Randy Howell, And basically the way
Yeah,
this works is
Brandy
through
is awesome.
exercise, so meditation, breathing exercise. And there's one exercise particularly that's called the Grand Canyon. And that exercise kind of teaches you to kind of go back and look at your issues when things get hard in trading, your issues, what you tend to do, and then work on those to kind of reframe or rewire the process. So that will work
nice.
that worked really well for me.
Yeah, nice. Especially breathing. I mean, there has been so much research now with Wim Hof's work, with Dr. Andrew Huberman's work on how the brain affects everything in life. And breathing is a secret power that most are not aware of. Yeah, so I absolutely love what you just shared. And so this is what I also found, that the traders who recover quickly, and it's the same in sports. I don't know if you saw Serena Williams. She got kicked out of the Australian Open, and her coach posted on Twitter saying the true greatness of an athlete is how quickly they recover after they are down. Everyone gets down, everyone makes a mistake, but how quickly they recover determines how they can sustain their career. And it's the same in trading. How quickly you recover after a loss, after something happened that was out of your control, after you made a stupid mistake, that determines how quickly you will achieve your goal of full-time trading or becoming profitable to begin with. So yeah.
So then the question is, well, so how do you get back on track quickly after a tough thing happens? I know you talk with traders, you connect with traders. I do the same. Is there something else that you tend to do that kind of forces you to get back on track, or just kind of being around traders helps for you?
So what I do with my traders, I encourage them to email me immediately when they had some adverse experience in trading. So, for example, the trader whose internet dropped out, he emailed me immediately all his frustration, because we need to get it out. Otherwise, it keeps ruminating in our head. And we need to be able to articulate it to a third party, to someone else outside our head, not just the monkeys in our head. So that's the first step. Know someone that you can articulate what was going on, but in a manner where it's not just complaining and whinging, but where it's matter of fact, where you don't let yourself fall into drama. Because that's what I found with a lot of traders who are unsuccessful. They have a lot of drama happening at the end. They're so, oh my God, this happened. It's like the worst thing ever. And I always say it's not the worst thing ever. Like, if you have ever been with someone in a cancer ward, that is worse than having a big loss, really. Keep it proportional to the mistake that has happened. Anything that is not life-threatening, to me, is not on the highest level of this is a bad thing. So that's step one, right? So being able to articulate what happened. And so when you articulate it, you resolve the emotional charge around it. The second step is I always look at the emotion, the main emotion that is triggering or that I respond with, because that gives me a good feedback on what is going on in terms of my own limiting beliefs, my own value conflicts, my own past experiences that are still, how Eckhart Tolle calls it, the pain body, or how we call it in coaching the toxic shame, according to John Bradshaw's work. So whatever is triggered, this is an experience from the past where as children we got shamed, or we got ridiculed, and we got ostracized, maybe got bullied, whatever it was, the experience was, that is usually the same feeling that we have when we had those experiences in trading. So for example, I was working with a trader, so the trader whose internet dropped out, we dive deeper into what were the emotions about that he had about the internet dropping out. And his thing was that as a child, he experienced something that was that he found extremely unfair. So fairness is a really high level for him, high level value for him, really important. And the internet dropping out and taking away his profit, taking his profits off him, that's how he experienced it, stealing his profits from him, was the same experience that he had as a child when he was bullied and his pocket money was stolen, and they took his lunch away from him. So they stole his lunch frequently as well, right? So he wasn't part of the cool kids in school and got bullied. So so you can see how multifaceted this is. So whatever emotion experience you have, just sit down, take a deep breath, and just remember, what does that feeling remind you of from maybe a past experience? And that gives you a clue around your pain body. And then just sit with that feeling for a moment. And the more you sit with that feeling, the more you breathe into that feeling, it will start to resolve, and the pain body will start to heal. So that's the second step, looking at your emotions. Now the third step is look at your thinking patterns. I was working with a trader who keeps micromanaging his trades. He is a support and resistance trader. So he wants to let his trades run to the next. So if he's long, run to the next resistance. If he's short, run to the next support. But he found himself getting out of his trades too early. As soon as price would stall a little, he would get uncertain and worried about giving his profits back, which has happened before, right? And then get out too early and miss out on a whole bunch of profits this way. Now, what was going on for him, he would make this trading all about him. So as we explore deeper, he would say, oh, I don't want to lose that money. Or, yesterday, that profit, I don't want to give it back. Yesterday, when I tried to stick with my letting the profit run, the trade turned around and I ended up break even, or I ended up in a loss. So I tried to do the right thing, but then I got punished for it. So I want to avoid that feeling. So he made it all about him, how he didn't want to feel certain things, how he was afraid to miss out or was afraid to give all the profits back. Whereas I was in our coaching circles that I run. So I then asked another trader who is a really, really successful trader. I don't want to say the number because people would know, but she's very successful. And then I said to her, how do you manage your exits? And she said, well, if I see a change in the order flow, so she trades stocks, and at the same time I see price breaching my support line, and excuse that I'm just quoting, she said, then I get the fuck out of my trade. So you could see she, being a super, super successful trader, she makes it all about the trade and not about her. She has the same fears, the same feelings, the same thoughts like the unsuccessful trader. I don't want to give the profits back. I hope it's not going to turn around. Everything that the unsuccessful trader experienced, the same she went through. The difference is that he only shifted his focus onto him and not onto the strategy, onto the technique. Whereas she let the mind chatter go on. Monkeys talk to each other, doesn't matter, just chat. I just focus on, is order flow changing, or is it breaching my trend line, or trend line down, depending on long or short. Yeah.
That's interesting. And that's, for example, of exactly what we talked about before. So I feel like it's easy to kind of be stuck in your own bubble when you trade. Like when you always stay with your same thoughts and you don't talk to other traders and stuff, it's easy to kind of be in the same concerns, the same thing, and kind of come up, and then those things are pretty small compared to what they compared to the whole scheme of things. So that's a very good point. If you get a new question about psychology to ask Mandi, make sure you comment below in the chat. I'll be asking those questions to Mandi pretty soon, and that could be anything about how to kind of help with emotions, things that you struggle with in trading, how to make your psychology or mindset better. I know we've done a survey here on YouTube before, and people say that psychology is the #1 thing they want to work on, the #1 aspect they have to improve. So, Mandi, where should people start to improve their psychology or their mindset in general? What would be the first step? Maybe like not the full solution, but the first step to starting to get some results with it.
The first step to everything, Etienne, is self-awareness. And so keeping a journal. For example, I started working with a trader who was fairly new, and we set up a journal, a self-assessment journal, as well as a journal for his trading, of course, like his trading stats. So the journal on himself, we started with him wanting to implement certain behavioral patterns and habits and routines that will help him to focus and will help him to improve his confidence. Now, what was really interesting, so for example, he loves cold showers and he loves the Wim Hof exercises. And what I also found, Etienne, sports or movement is so important, especially after we had a challenging trading session, right? When things didn't go our way. And again, there is so much research done now, especially with Professor Huberman's work on how the brain works and the chemical reactions that are going on in our brain. So after we had a losing trade, for example, so after he performs badly, part of his routine is that he has to go out for a run and he has to meditate as well. So he chose that because he knows that he responds really well to both of these exercises, right? So running and meditation. Now, I'm not saying that you have to meditate and run in order to succeed. I know plenty of traders, they're six-figure traders a month. They don't meditate. They don't do any sports. They eat not particularly healthy. They drink, and they're still amazing at their work. It's what works for you, right? It's just really individual. So with this trader that I just mentioned before, we set up the routine, and he had to then tick what he did. And he just sent me an email this morning saying, I am in shock because I realized for the first time that I'm all talk, but I don't follow through. He realized by keeping this journal that he has the good intentions to do what needs to be done, but he wouldn't do it. So he had quite a shocking trading day. And we agreed that after he has a shocking day, he goes running and then he meditates, and he didn't do it. What did he do? He was complaining. He went back into the market. He went on tilt, lost more money, felt even worse about himself, started a fight with his wife, went off at the kids, and then he felt so bad about himself, he couldn't get out of this vicious circle. Now, that was really good feedback for him, that he saw for the first time by keeping that journal that he is not doing what he says he would. When we make promises to ourselves, even the smallest promises, like I brush my teeth every evening or I do my bed up every morning, if we don't keep those little promises, that we are telling our unconscious that we are not trustworthy, and that will follow through in our trading journey. So number one step, self-awareness. Yeah? Become aware of your thought patterns when you're in a trade, the fears, the sentences that you say to yourself, the feelings that come up. Once you know that, once you have a little bit of some statistics around what is going on for you, then you can start taking action. You say, so this is what I mentioned before with my trader who was just making micromanaging and taking his profits too early about himself. When we saw that he was just focusing on his fear, now we could implement strategies for him where he shifts his focus from the fear to focusing on the market. What does the market tell us? And that needed to be practiced. That didn't come naturally. So I trained with him to say out loud to me the thoughts that he had, like to say, "Oh no, I'm worried. I'm going to give my profits back. Look, I think price is going to turn around. I'm worried about giving my profits back." And then I would ask him to say the next sentence, but it doesn't matter what I'm afraid of. My exit has not been triggered, so I stay with it. I can do it. I have what it takes. I can conquer that. I can be with the feelings. That's completely fine. They will go away in a minute. I just need to focus on my exit. Yeah, so we looked at the feelings and the thoughts that stopped him in the past, and then continued the sentence, and we changed the feelings to I can do this. I can endure this. I can be with that fear. I can have the confidence to do what it takes. Now, so that's in the second step, to transform that thinking. Now, we also want to look at, every trader looks at profit and loss ratio, which we now know, right? I think everybody knows by now, profit loss ratio doesn't tell you anything. And then I say to my traders, focus on the profit factor and remind yourself, if you don't take your loss where you said you would take your loss, you're going to screw with your profit factor. And I like profit factor much better than having a 2-to-1 R, or having a certain amount that you can lose compared to what you can profit, because number one, sometimes we need to get, so let's say we have a trade set up, it gives us a 2R profit target, but after half an hour the trade starts turning around, it breaches the trend line, order flow changes, and we need to get out of this trade, right? So our 2-to-1 R is being skewed. So I know there's traders that say it doesn't matter, just stick with your R to R ratio. I personally don't. I'm like, if the market tells me something else, I do that. So that is a little bit too rigid for me personally. And again, it's not right or wrong, it's just what works for me. What I love about profit factor is that profit factor is an average, where we know on average we have a certain, so profit factor, let's say of 2, means that for every dollar we lose, on average we make a $2 profit afterwards. So I always say focus on increasing your profit factor rather than looking at your profit loss ratio. So if you learn how to read your statistics and how to use your statistics to improve your trading, that's then the third step, or not the third step, but it's a parallel step. You have to work on both areas at the same time. What do you have, Etienne? What other ideas do you have? I mean, you speak to so many traders. I'm sure you are a wealth of information as well.
Well, this is part of it. This is the main thing. So the metrics are so big. We improve with data.
Yeah.
We don't improve by just taking the right trades. We improve with data. So that's huge. For me, I had a similar experience where it's really about understanding like where you fall short and where you got to improve. I had a similar thing where I had like a really good month a few months back. That was like after getting my coach. I had like a really good month, the best month of my year, and I stopped trading for the month from there. So it was about like the 15th day of the month. I stopped trading for the month, and this is really good. I got a big profit. I'll stop for the month, and I'll get back next month. So I took a break. It was really nice. I felt really good and everything.
Yeah.
But when it got time to go back to the market, that's when I felt like, oh, I don't want to go back to the market. It's like I didn't want to lose the profit I had the past month. I had a really good month. I didn't want to lose this good month. So for me, getting back to the market there was really tough. And it took me about like 4 or 5 days in the month to be able to go back to the market. And I started to feel bad about it and stuff. So I understood that I had this kind of tendency to. It was basically like a lack of self-esteem, lack of confidence to not want to go back in the market. And so as part of that, I worked on it a lot, and it got better over time. So it was just about kind of splitting that pattern and then working on it after. So it was a pretty good experience to go through.
Yeah, nice work. And that's the thing, like so many traders are afraid of their shortcomings, of their flaws, of the mistakes that they make. We don't need to be afraid, right? Just take it as feedback and it's like, oh, I didn't realize that about myself. Like my trader who's like, I did not realize how many promises I make and I do not follow through. Because he didn't have statistics for it, right? He didn't have data for it. But once he had to tick every day what he does and what he doesn't do, it's like, wow. The reason why he didn't follow through was partly because he overpromised, he overcommitted. It was almost impossible to do everything that he committed to do. So, yeah, there was also good feedback. So that's why you don't need to be afraid. It's just feedback, and then let's resolve it. Let's deal with it.
The other thing I feel is, of course, like a trading style needs to be aligned with your personality and what you like to do.
Yeah.
So you might be aware of this, Mandi, but a couple of months or about a year and a half, no, 2 years back, I started to use more algos in my trading, and I started to kind of use these algos, and it was really cool at first. But then I realized that only algos for me kind of gets boring, something that I hate to manage. It's not my preferred style of trading. So I need some kind of manual trading at the same time with my algos to feel like I'm more fulfilled, feel happy about it. Not for the action, but for the feeling of like being in the market every day, looking at charts and that stuff. So I found that for me, going full algo was not the way to do it. So now I kind of use a mix of both. And I feel it's easier to kind of go back every day and do the right thing. You have to do it every single day. As opposed to just algos you have to manage, and it's like a different thing. Just put some lines in the chart, it gets boring. So for me, it doesn't work that way. So I found to kind of mix it up well to fit my personality better.
I think it's like doing sports, like let's say we we play tennis because we have the Australian Open here at the moment. And when we love playing tennis, like if you love trading and then you only use algos, then you miss out on the thing that you love doing, right?
Yeah,
Why would
exactly,
you?
exactly.
I understand also algos because you used to travel a lot before COVID, that algos had their place in your life because you could still get in the action when you were in the air, right? So
Yeah.
yeah.
Well, that's a good point. And maybe it's COVID that causes that too. That going back to not only algo. So
Hmm.
also when COVID finishes, I'll test it out to what works the best and what makes me feel better.
Yeah.
Good question.
And life changes, like
Of course.
traders who have kids and families, they can do different things than traders who are single, for example. Both has advantages and disadvantages. Traders who work, different story than traders who don't work. So I was working with a trader was really interesting. He was over trading, and as we were diving deep into exploring what was going on for him, is that he said, "Look, I've been sitting there for 4 hours and I made a $50 profit." And he's a little bit of a newer trader, so him being profitable is, I said to him, you being profitable, even though you don't rake in the thousands and millions as yet, you're in the top 25% of traders in the world, right? So, but what was going on for him, he also has a high paying job where he would make $1,000 a day as a consultant to the mining industry. And so $50 a day profit after 4 hours was just out of whack for him. And what he needed to understand is that we as traders, we don't get paid for the time. We get paid for our expertise and our skill set. And if you make $50 per hour in 4 hours, that is about $12.50 an hour. That is the level your skill set is at. So now you need to look at how can you improve and increase your skill set and your mindset to increase the income that you have. That completely shifted for him because before he felt guilty, being away from his family. So he's got 3 kids and of course a wife. So he's a family man. He loves his family, and he felt guilty sitting there for such a long time on the computer, feeling not productive. But once we changed that, looking at trading in terms of we get paid for the skill set, he was super, super inspired and motivated to work on his profit factor, to work on his skill set. So it's another difference between profitable and unprofitable traders, seeing that they're being paid for the skill, not by the hour.
That's a really good point. That makes a lot of sense as well. In trading, it's also a lot of things in life. You get paid not for the hours, but unless you work a job, but you get paid for not the hours, but for the skills you have and what the kind of value you bring. That's really interesting.
And the value you
bring. Some question
exactly,
if you want. Yeah.
Yeah, let's do that.
So we have a question here by Ope. He's asking, so I have an issue with holding winners and letting my trades run. So he has tough time to kind of let his trades run and keep his winners. Any advice on what to do?
Awesome. Ope, you're not alone. Like so many traders have this challenge. And number one, what I want to pre-frame is I assume that you have set profit targets and set exit strategies, because it's different. So if you are a discretionary trader and you kind of go with the flow, it's very different to when you are a strategic trader and you have predefined profit targets and exit strategies. So that's one thing. When you know where to exit your trade, let's suppose you entered on a double bottom. The double bottom target is 100% of the repeat from low to neckline, and now you want to let it run, but you see you're in profit, you start getting nervous, you get itchy fingers, you start getting afraid of giving the profits back. So again, like with the trader that I mentioned before, listen to your thoughts and write down your feelings and look at, are they all about you or are they all about your strategy? That is number one. Number two, what I found is traders who are afraid of giving profits back, their exit strategy is often not defined enough. So how I said before with my trader who's very, very successful, She has a trend line, and if price breaches the trend line, she's out. So it's very defined, right? It's like you can't argue with it. Price goes through it. That's it. Even if price only went sideways and then takes another leg up, she doesn't care because she knows she gets another trade. She's already with the next opportunity. She doesn't even look back. So that's the second part. Have a look at how clearly defined your exit strategy is. It has to be so clearly defined. Like my favorite question is, how do you know when to get off the train? If you're in the train, when to get out of the train? And I get the funniest answers, but because you don't have enough time, I can't interact with you. The answer is when the train has stopped in the train station. And here in Australia, the doors go beep, 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 and then the doors open. That is the moment when your brain knows, you don't even need to think about it, to move your legs off the train. And that's how defined you want to have your exit strategy. Whatever it is, it doesn't matter, but it needs to be that defined. When you have it defined like that, then you also will be able to hold your profits or to hold your trades longer and not micromanage. So this is the routines and the habits that you can implement. What you also want to do, which can be helpful, is to look at where is that fear coming from. So the trader that I mentioned before, one of his self-talk was that you said, they are taking my profits away from me. Now that clearly showed me that he feels at the mercy of his external world, that he doesn't have much faith and confidence in himself, that he is stronger than the external influences. So, and that came back to his experiences at school when he was bullied. And as children, we are helpless. That's just the reality of it. And then to remember and to realize that you're not a child anymore and you have power, you have control over your life. So looking at what are the feelings and emotions coming up and what is the self-talk that comes with it, that you then can transform into something that encourages you to hold on. Yes, you can do it. Yeah? Yes, you can be with that uncomfortable feeling of fear and anxiety. Just let it be there. Let your mind chatter. Doesn't matter. Just focus on the chart. So I hope this is helpful for you, Obi. And that if not, please let me know if you have further questions about it.
Yeah, the other thing is it might be a case too of like not having enough data on your exits. Maybe you put like a take profit somewhere, but then you don't know if it's going to work or not. And of course, then it's normal to have anxiety or to cut your trade short. Sure. So I think it comes down with what Mandi said, but also having data to make sure that you know when to exit and when it makes sense to exit.
And I love that, Etienne. Thank you. Because what then the next step is what I also ask my traders to do. They have a spreadsheet, and then when they get out of the trade, and most trading stats platforms, they have that already. So look at what did the trade afterwards. Did it pretty much turn around where you exited, or did it continue? Now, if it continued, this is no reason to beat yourself up, right? This is not why we do it, to tell yourself what a loser you are and how much more money you could have made. Completely waste of your time. What that gives us feedback on, if you have 10 trades and 7 out of the 10 profitable trades that you were in continue on that journey, on that trajectory, that tells you that you can fine-tune your exit strategy, that there's more available for you in your exit strategy. So you also want to look at when you enter the trade, what did the trade do? Did it go straight into profit? Did it first go into loss and then into profit? Or did it go into profit and then into loss and then into profit? So that gives you feedback on timing. I think, so obviously just answering, I think my issue at times is holding on to my beliefs of trading in probability. I'm not quite sure what you mean with trading and probability. Etienne, can you help me here?
Yeah, so I've done a video on that in the past week about the idea that basically any trade can be a loser and a trade can be a winner. So you should think about the fact that even if you think like you have a 70% win rate, that you should still be thinking that this next trade could be a loser anyway. It's not more likely to be a winner. It could be anything, loser or winner, it doesn't matter. That means that first of all, you don't close your You wouldn't trade short because they could have the same chance of being profits and hitting your target. And at the same time, you don't let your losses run because they could also be losses. So yeah, that comes down to it,
Got it.
basically.
Yeah, thank you for clarifying. So now I understand, even though we have, let's say 70% profit loss ratio, meaning out of 10 trades, 7 trades are profitable, 3 are losers, we can still have 10 losers in a row because it's just an average. And this is really what's then playing with the traders' confidence, with their fears and their self-belief. Now, I personally don't look at it this way, but again, I'm more of a discretionary trader and more intuitive. Whereas now this is why I love working with you, Etienne, because you're the extreme opposite to me. So we can really cater for everyone. You're very structured and strategic, and so that's so good. So the way I look at my so you said before, okay, you said that you get scared when the trade stalls. Now go back through all your trades and have a look at what happened after they stalled. So that's, getting the statistics again of understanding the behavior of your trade. Now it depends on also what you trade. I mostly trade the DAX, so I know the DAX by the back of my hand. I know the pattern. So I know, for example, I was doing a live trading session with one of my traders yesterday, and I said to him, well, I would love the DAX to breach the 900 because the DAX loves breaching the zero levels, the major levels, flushes the stops out, and then comes right back in and then takes off. And the DAX did exactly that. So it took a little while, but eventually it breached I think it was the 900 mark. Yeah, it was the 900 mark. And then flushed right back in and was setting up for a long. This was not skill for me. This was for me understanding the typical behavior of the market that I'm in. So this is something that I would encourage you as well, to really understand the behavior of the instrument that you work. So you say sometimes I'll hold and sometimes I'll close out. So now you want to get data on what is sometimes. What is the context when you can hold? How is your self-talk when you can hold? How do you feel about yourself? Sometimes, we feel on top of the world, everything is fine. And then other times we had maybe a disagreement with someone, or we are not feeling so well, or, something happened. We saw something sad on TV, or we saw something sad happening in our environment, and then we are not feeling on top of the world. So sometimes our external circumstances make us feel a little susceptible to not having the mental strength, not being able to take as much heat. So you want to get data on what sometimes is for you. Will be really important. Now, so that you are not like like those pinball machines where the ball is being pushed around everywhere, so that you are stable and at core and grounded. You want to have the well-being approach. You want to, and that's where Wim Hof breathing comes in, cold showers comes in, exercising, yoga, whatever rocks your boat, mindfulness, meditation, whatever helps you to feel strong from the inside and grounded, so that you not by every external event feel thrown off balance, because that then will show in your trading. And I was working with a trader who was doing really, really well. So would do an average $500 a day profit from coming actually basically from being a losing trader. And then suddenly for a week he started going on tilt and doing stupid things. I'm like, what happened? Something happened. He's like, nothing happened. And I was like, something happened, because this is not you. And so indeed, he had a disagreement with his sister. He didn't think it was that bad. That's why he said nothing happened, like life is normal. But then when we really dived in, we saw that the disagreement with his sister really triggered something in him, which was based on childhood experiences, a father who was not present and him having to be responsible for the sister, and so on, that triggered feelings of guilt and shame in him. And that was the reason why he went on tilt. So, the term going on tilt comes from playing the pinball machine, because when we get annoyed and frustrated, we used to shake that machine and then it would just tilt and you lost the game. So I hope this is useful. Or we usually would be easier to get more data or have an interaction with you, but I hope it is still useful for you and you have something to move forward and to start resolving this. Yeah, it's really not a big deal. You got this. Awesome.
So here's a question that I'm curious about, and I think it'd be really good here for the audience is, how do you know, Mandi, that your discretion actually helps with trading, that you wouldn't be better with just a system, you follow the rules, and that's it?
Yeah. Again, coming back to stats. So I have a trader who, it was really funny, this guy. So he has a system, right? Like really strict system. And he came to me because he said, I cannot follow my system. I just go off and just do my own thing. And can you help me be more disciplined? And then I asked him to keep some stats. So he uploaded the stats into the trading software, and into the stats software. I think he was using H-Wonk. And then we looked at the stats, and you know what the result was? His discretionary trades, he did much better than on his other trades, the trades that followed the plan. And he was completely flabbergasted. He was like, I can't believe it. Now, the challenge for him was that he actually didn't know what he was doing when he was trading discretionary. So every trade that you have, as you know, we can classify them in, is it a trader view or H-Wonk, or I saw you use something else, another platform that I don't know. We can classify the trades. And so that's what he did. He wrote discretionary or system. And the results clearly showed discretionary won. So then to be able to give his discretionary trading a little bit of structure, because even if we don't know it consciously, unconsciously or subconsciously, we do have a strategy in place. And to bring that out took a lot of self-awareness and journaling and trying to understand what his thought pattern was and his feeling pattern as well. So that's how we knew with him. Another trader was the opposite. So he's a very aggressive trader. Big trader, because he's so aggressive, he can trade really big. On the flip side, if he gets frustrated, he would only get into discretionary trading when he got frustrated. So he was trying to force the market, force the trades. And so again, the stats showed clearly discretionary trading was more compulsive and impulsive for him rather than a skill. So that's how we know it. Now, we also know it, Etienne, by our DISC profile, right? The DISC profile that you and I are such big fans of. Now, according to your DISC profile, Etienne, it shows that you love structure, you love routine. And I always say, Etienne, this is part of your superpower, part of your success, that you are so structured. I'm on the other side, I'm extremely kinesthetic, extremely feeling, and that is my superpower, especially when it comes to coaching. Often I have a feeling, I have a hunch, I have an inkling, and I'm like, can you try this thinking on? Can you try this on? Is that what's going on for you? And they're like, spot on. And I can't explain where that's coming from, right? It's just because I'm so kinesthetic. Now, when I trade the DAX, I feel the DAX, because the DAX, it goes like with a lot of energy, like bang, 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 and then it stops like a roller coaster on the top. It stops and then rolls over, and it's like then it dips over. So that is me feeling the order flow, feeling the volumes that go through the markets. How can I put that into stats? How can I create a strategy out of it? Now, so I needed to really do a lot of journaling to be able to articulate what I feel. So this profile tells us also what our superpowers are. Now, at the beginning, I was solely kinesthetic, so emotional and feeling, which was a downfall, because kinesthetic people, they tend to do what they feel like doing, what they want to do, and not do what needs to be done. People like you, right, Etienne, you are someone who just gets shit done. Like, you do what needs to be done, no matter how you feel about it. Your superpower again. That's by the way, another trait that I see in super successful people, not just traders. compared to the people and traders who don't do well. The super successful traders do what needs to be done. The not so successful traders do what they feel like doing. In contrast, they avoid doing what doesn't feel good. If taking a loss doesn't feel good, they don't take it. And if letting the trade run to profit target doesn't feel good, they start micromanaging and get out too early. So it's another insight for us. If that is the case, and so that's what you did, Etienne, you build up your feeling, your intuition about the market more. So you build up your high I in DISC. I had to do the opposite. I learned from people like you, like Tom Dante, who's also extremely high C, super structured, super organized. I learned from you guys how to bring more structure into my life because it doesn't come natural to me. So what we want to do is we want to focus on our superpower and then add supportive skills into our behavioral patterns. So I have access to the high D, the facts and figures, even though I'm so emotional, but I have trained myself to focus on facts and figures. High I comes natural to me, high S, which is being taking care of everyone else. Anyone who is high S will find it hard to succeed in trading because we make it all about the people around us, not about us. And so that's something that you mentioned last time, that you reduced your S and you started taking care of yourself a little more rather than trying to accommodate for everyone else. So make it healthy, take care of others and yourself at the same time. And so the C's are being structured, having spreadsheets, routines, automated emails, right? All of that.
Very interesting. I appreciate Mandi. So I lost the chat here. My internet dropped, but we had a question in the chat about how do you, when you start trading, kind of push away the negative people, negative news about trading, who say it's only trading is only gamble, it's something you cannot win at, it's something only like scams do or something. How do you kind of push away these things? If I guess if you don't push away them right, they might come back, and then one day you feel bad and I think, oh, it's just a thing where no one wins, it's bad, then you give up. So
yeah,
how do you kind of push that aside? Man, do you have any thoughts on that?
Yeah. Yes, I love Joe Dispenza's work, Mark. So really interesting, Etienne. This is, of course, something that I went through, especially with family. Family being so protective and trying to not get us, they think we get us in trouble. Maybe we do, maybe we don't. So how do we deal with that? For me, in hindsight, so at the time when I was confronted with these judgments, I was very defensive. I tried to transform the world and show them that it is not gambling, and I would argue with them, and I would try to make them understand that it's all about skill, but they didn't want to hear that. So I wasted my time, I wasted my energy, and I think in hindsight, looking back, and I think every trader goes through that. I don't know if you went through that as well, Etienne, where you were super protective and tried to defend yourself and the trading world. In hindsight, I think it was also my fears being triggered that they are right and that it's true what they're saying, and me not wanting to see that. Very much, I remember I was going out with a guy and he had a few other girlfriends. I was in my early 20s for my defense. And someone said to me, look, I saw him with someone else. And I was like, no, not hearing. And I said, oh, you're a nasty person. You're just jealous. And I completely got this person out of my life rather than dealing with reality that maybe my boyfriend was a womanizer, which he was. And so that was done and over quickly. So it could be that we don't want to face reality. Or that we are afraid of that could be the reality, and so we don't want to hear it. Yeah. Nowadays, in hindsight, this is what I do. People say trading is gambling. I'm like, yep, you're right. Whatever, you know. I just say yes. I don't argue with people who don't know anything about it. I used to say, have you ever traded? What do you know about the markets? I don't even do that because I can choose our conversation and discussions to contribute to a trader and help them, or me having a great time going to the movies, reading an amazing book, listening to Andrew Huberman's work and see how I can use it for my traders, or I can argue with idiots. I know what I choose. So the third point, though, is, which is most important, when someone says something and I feel triggered, Etienne, I know that I have doubts about myself. I know that I have limiting beliefs around myself. I know that I have a lack of confidence in myself, and I deal with that. Yeah, so pretty much what you said before, when you said you didn't want to go back to the market, and that was feedback for you that there was some self-esteem issues you needed to iron out. And then that's what you do. Oh, feedback, self-esteem down in the gutter. Let's bring that back up. What do we do? How do we do that? Is that helpful?
Yeah, that's very true. So are you for sure? Some people do it out of like they want to protect you. They want to make sure you don't like lose money in the market.
Yeah.
And that's all good. I have no problem with that. Some people do it just because they don't know. And then I think when you change the people, like you don't have to push people away, but when you change people around you, when you surround yourself with more traders, then you won't have these thoughts anymore, or you have less people say that for sure. So you can have some family say that, and that's fine. You kind of deal with it. You get used to it. But you got to surround yourself with people who don't think that way and who think a different way. I think that's the best way to do it. And like you said, when something triggers you, then that's a big issue that you have to work on. So I agree with that.
And I love what you say, Etienne, because that's a natural progression. Once you're so certain in yourself, these people fall away. Like you don't even see them anymore. You don't have them in your life anymore. Because you have so many other people in your life. And then you go to a party and they say, what do you do? And then you choose what you say. And most of the time, I don't say, I just say I'm a coach in the finance world. So I don't even go down the other path.
That's actually a pretty funny thing. So when people ask me what I do now, I pretty much don't say I'm a trader anymore because it brings conversation. People talk about different things. They ask me what I think of this market, cryptocurrencies, this and that. It's just too much trouble. So I prefer to say something else. So yeah, it's easier like this. But yeah, good point. Awesome. So we have a question here. By the way, so the person who asked about this, about how to without negative people, then just said that this helped us. That's really cool. I have a question here about, so Greven is the opposite way of someone we talked about before. He says, any tips on how I can take my profits without feeling the fear of missing out? So FOMO, how do you take your profit without feeling you could go further or kind of get more profit out of it?
Thank you. Great. How can I take profits without feeling of missing out? I know what you talk about. It's like the moment you press that mouse button, that's this feeling shooting up. It's like, oh my God, there's more. And then it goes one more in your direction. You go back in and then it turns around and you're in a loss. That is my experience. I call it Superwoman trade. Again, it is, look, Raven, in a nutshell, what is those fears, right? What is the fear of missing out? What is the compulsive and impulsive trading behavior? It's anxiety. What I would suggest to you is to really sit down, take your profit, have that FOMO coming up, and just be with it and figure out what is that fear about. I can make assumptions now, which I don't know is what feeds your circumstances. But often when we take the profit and then we feel the fear that there's more in it, we got out too early, that is a scarcity thinking. That maybe there is no more to get. The question I have for you is, when you go to an all-you-can-eat buffet, do you eat until you feel sick? Do you need to eat everything, or do you just eat what you feel serves your body, gives you nutrition, you have maybe a balance, a little bit of everything, and then you stop? Yeah, so that is, for example, an expression of scarcity thinking. I need to make the most out of my money. Money just comes and goes. Money is like air, you just turn on the taps, you close the taps. So that is something that I could think of with the FOMO feeling. So maybe again you had in the past an experience where you were punished for not not being the best or giving the best. So you always feel like you're not good enough. That could be something as well. So again, without asking you more questions, it's really hard to answer this question. So I give you different pathways to go down and to explore. Is that FOMO an experience of not being good enough? And again, I can just quote Linda Rushke, because one of the biggest mistakes I see in people who stay stuck in being unprofitable or playing a small game and just being a little bit profitable is that they keep being angry and upset about not being good enough, not having let their profits run long enough. Oh man, I got out of my trade too early. There was another 20% profit in it. And they're so hurt about it and so angry about it that consumes them so much they can't go into the next trade and make another 50%. Yeah, so it's the opportunity cost of being angry and hurt. It's the traders who miss out on trades. There was this amazing setup and I hesitated, I didn't get onto it, and then I feel so bad about it that the next setup is already there and they still don't get onto it because they're still busy feeling bad about the trade from the past where they missed out. Whereas again, people like Linda, they just say, dreads, I missed this trade, or dreads, I got out too early. Or I should have gotten out early. I didn't see it turn around. And then they get onto the next trade. They don't need to be perfect. They are never perfect. Like Linda misses so many setups. It's just unbelievable. And yet she's still performing on such a high level. Yeah. So Linda gets out of her trades too early all the time. And then she gets back in. Also, at the time when she got out, the feedback that she saw on the chart was, I better get out because now I don't have enough certainty, not enough information to know what's going on next. The moment she has certainty again, she gets right back in. Yeah, so look at the possibilities, the opportunities, and really be okay with that feeling of fear. So it's okay that you missed out and left money on the table. And I know the trading books don't say that. I always say it's the evil educators, because the worse we make you feel, the more money we can make, because the more courses you're going to buy from us. Yeah, don't need to be perfect. Leave money on the table. I always say, that'll do, pig. That I leave that for others. That makes me feel better. Whatever makes you feel better. Etienne, what do you reckon?
Yeah, we discussed that a few, I wanted to say months, but it's years back when we did a program together about the money scarcity and the fact that, I've been stuck in that for a while, where like I would try to like save money as much as I could, like not spend money, find the cheapest option all the time. And it serves some point, but not always. So I found that sometimes you get a lot more out of spending a little bit more sometimes, or just not obsessing about the amounts and like trying to save $5 in a plane ticket or whatever. So for me, that's it. And I feel like the less I obsess about it, the more I kind of spend, not freely, but like without obsessing about it, the more money I make overall. So it's just a funny thing.
I love what you say, Jen, because do we spend 10 minutes and the energy and the effort to save $5? Or are we willing to spend another $5, but we keep the energy, so the emotional, physical, and mental capital to create $5 or to create $50? So that's what we want to do. We don't want to look at where we can save. We want to look at how can we expand and make more money, which is Richard Branson's system, right? Screw it, let's do it. As soon as he had financial problems, he would buy another company. So always expanding and growing. But what do we hear when we read about budgeting, or we look at budgeting coaches or so? Save your coffee, don't go out for coffee every day. And I'm like, don't you touch my coffee. I'd rather figure out how to make another $5 a day, $5 a day, than missing out on my enjoyment and taking care of my mental capital and emotional capital and feeling good and feeling the abundance and connecting with people for $5. I'm not doing that. So that's exactly what you said. So choose where you put your energies where you spend your energies. Now, another really interesting part about this is, Etienne, is linear thinking versus multi-dimensional big picture visionary thinking. Big picture visionaries, and you are one of them, Etienne, never think about where can I, yeah, don't touch my coffee. Thanks, Purples. They never think about where can I save money. They always look at, if I save money here, what impact does that have in the other areas of life? If I spend money here, what impact does that have? So me not going to get my coffee means that I don't get to connect because I'm alone at home all day working. It means that my well-being is at stake. It means that I get cranky. It means that I mismanage my trades. And I might lose $500 because I try to save $5. So the multidimensional thinking. I was working with a trader who was trading US stocks, and he so in trading US stocks with an American broker, you need $25,000 in the account to trade. And I said to him, so he's in Europe, I said to him, why don't you trade with a CFD provider where you don't need $25,000, where you can trade with 2,000 euros? And he said, oh, let me have a look at the commissions. Oh, the brokerage is far too high. That told me that he only thinks in one-dimensional thinking. That's right. He was with Tasty Trades in the States. And Tasty Trades has zero brokerage. They make their money somewhere. I don't know where, but they make it somewhere. So that is one thing. The other thing that he didn't take into consideration, so he wanted to have another broker in Europe that doesn't charge brokerage. That is this one-dimensional thinking. And I said to him, look at how much more money you're able to make because you don't need to come up with $25,000. You can trade with $5,000 and you can make the other $20,000 work in another way. And even though you pay more brokerage, yes, you spend more here, but you make more there. There was a complete new concept for him that opened up a whole new world for him. Multi-dimensional thinking. All the big picture visionaries, they think like that.
Really good point. I really appreciate that. That means a lot as well. So that's really good. Here a question about.
That's you, by the way, Etienne. You think like that a lot.
Well, I had to train myself to think like that. I didn't think of that from the start. That took a long time. So glad you say that. We have a question here from Il Mantas, who asks, how to understand which trading statistics should I record to my spreadsheet? We talk about one of them, a few of them, but what are the things you could think about?
Yeah, so one of my favorite books is High Performance Trading from Steve Ward, where Steve is just amazing. Right? So Steve was my coach a while back, and I have the highest regard for him. Now, Steve is very structured as well. And so he has worked mostly in hedge funds with prop firms, etc. So he really looks at the stats that the big traders, the big firms use. So I would recommend you look at High Performance Trading by Steve Ward to begin with. But to start off with, look at profit factor. That's one of my favorite ones. For every dollar that I lose, how much profit do I make on a winning trade? And that's the average. I look at profitable trades in a row and losing trades in a row. So my benchmark is 7 profitable trades in a row. When I have 7 trades in a row, I know I need to start being careful because now I'm at risk of making a mistake. So that's a really useful statistics. Look at losing trades in a row. Let's say you have 4 losing trades in a row. So you know that when you have losing trades, that after 4 losing trades, your average has been hit and you should start making profits again. If you don't start making profits again, then have a look at the market. Maybe the market is not useful for your strategy. So for example, all my scalpers, they're doing really, really well right now. The momentum traders or the swing traders, they're struggling and scrambling and can't keep up with the market, just going bananas up and down. The momentum traders and swing traders did really well in the last year, really. They were just, reining it in. But the scalpers weren't doing so well. So you need to look at, is the market then still suitable for your strategy? Or is there something in your life that you're going through that you need to get and find your balance again? Because again, someone who's trading full time, who needs to feed a family, they can't afford to say, well, I have this tragic thing happening, or I have to move house and I let myself off the hook and don't perform. No, I need to move house, I need to organize the kids, I need to take care of my sick father and perform like a world champion. That's compartmentalizing, like any athlete needs to do. So what else? What other statistics I love? Average loser versus average winner, of course. I'm always careful with the averages. So if I have, let's say, average loser bigger than my average winner, I always look at with my client, was there a one event where that skewed the results? So for example, working with a trader who's really, really consistent, profitable, so average loser, smaller than average winner. But last week he was stuck in a trading hold and got out with a $4,000 loss. So that completely screwed his results now. So we need to take that that one-time event out of all the statistics to keep the data clean. What else would you say, Etienne? Of course, Sortino ratio. So Sortino ratio is when you are doing. So you want to have like a nice curve going up, right? Equity curve going up, your profits going up. Sortino ratio is like when you're going up. So how much drawdown did you have? How much retracement did you have on your equity curve? You don't want to have too much of a ratio. So you, sorry, of a drawdown, and every time having to recover. Another great stat is the recovery rate. How quickly, and this is where Linda is an absolute champion. When she had any adverse events, she would recover like a world champion. So she had this thing, this story. Sorry, it's so hot here. We have 30 degrees today again. So, and I turned off the aircon because it's too noisy. So Linda had this event where she was in a beans trade. Something happened. She was 80% down on her month. And then she just buckled down, focused, got her team organized, and ended up the month, I think, like 5% up. So she basically recovered the whole 80% and made 5% on top. That is the recovery rate. Same in sports, right? Really, really important. Sorry, Etienne, that's just what I thought. What else would you think? What do you reckon?
It's definitely good metrics. I appreciate that. So two things that I track also on top of that are the compliance level. How many times did I follow my plan on my trades? If I made a mistake or didn't follow my plan, I track that for sure. And then the other thing is, like we discussed before, what if you close the trades too early? Well, I make sure to track if I didn't close my trades, if I like waited to the target, would my trade be like hitting the take profits? And I track that to make sure that seeing like if it makes a difference. I close my trades early or not, if it makes a difference, if it's worse or better. Usually it's worse, but I still track it to make sure that to know what the stats would be if I didn't like play with my trades or manage them. So
yeah,
those are two stats that I add
nice
to that.
one. Really nice one. What would have happened if I hadn't? And then writing it down, and you have it black and white in front of you, like
exactly.
I think Opie, right? So write down how much profit you actually left on the table, and then ask yourself again: do you really want to micromanage your trade or not? I love that. What I also do is with my traders, I say to them, go back to the last 100 trades. How many losing trades did you have? Out of the losing trades, how many of them did you exit at your predetermined exit or according to your strategy? And how many of them did you exit later or earlier, so not according to your strategy? So losing trades are not always losing trades, and winning trades are not always winning trades. How many winning trades did you have? Out of them, how many did you run deeper into a loss and then recovered, and you know that was a dumb luck trade where you got lucky, compared to the trades that were really skill? I found this also very useful statistics to keep, and you might be surprised how many times you get lucky.
Very interesting. So Mandi, we're already an hour and more in, so I want to respect your time. People can find you on your website. So can you just mention that, where people can find you and connect with you?
Yep, on tradingpsychology.com.au. or on Twitter, which is M for Mary, P for Peter, X for X-ray, MPX at, no, sorry, that is Mandi at MPX_trader. Yeah, on LinkedIn, everywhere. Twitter is the best. I'm on Twitter a lot, not so much anywhere else. So thank you so much, Etienne.
We'll try to bring these
possible.
YouTube live with you a few more times, probably every month or so. We'll try to see, because I know people like it. If you like this live stream so far today, give it a like. I would really appreciate that, so we can continue to make these more, and I also have to recommend them to YouTube. So I appreciate your time for being here and for watching this live. Appreciate you, Mandi, as well. And we'll catch you guys pretty soon.
Bye.